Fuck is up, everybody? It's May the 6th. Just got a little mid-trading session recap going on here. I don't really think much else is gonna happen today in the markets. It's a complete chop fest today. Um, and I'm just gonna talk a little bit about the grand scheme of things. I tried to stream yesterday talking about shit, but it didn't get uploaded. So I went over just a lot of my grand scheme idea things with what's going on in the market right now and what everyone else is talking about in the market. So, yeah, today we're kind of just trading sideways. So I guess I'll start off by recapping the shitty trades I made this morning. So, yesterday we got S&P doing crazy things. We got S&P going straight down, and yesterday I bought some puts right out the gate. I bought puts at like right here after we broke this level, and sold them for like 30 bucks profit, but they ended up running about 600%. It would have been about $1,200 profit. So that, with that in my another lesson I've learned many times, with that in my very recent memory today, I immediately, what does this look like? So this is yesterday's price action straight down. And you could have thought at any level, hey, we'll get a bounce, but it never did. Just went straight down. So today, what do we get? Straight down. I buy puts at the literal bottom, and we're right about at this 0%, this 405 support level. I thought we were going to break through that. That would have been the second retest of that. So I shouldn't have gotten so aggressively short. Another thing I need a new rule is small size on Fridays. Fridays are notoriously bad. Some traders don't even touch Fridays. They're known for being choppy messes because it's right before the weekend. No one's I mean, typically if it's a lot of selling or a lot of buying into the weekends, if it is one or the other, then you'll get some direction, but otherwise it can just be a low volume chop fest like it is today. So that was my first mistake, going aggressive. And then second mistake is I should have zoomed out. I would have really seen where we were on the chart. Was thinking we just plow right through the support, but I should have. I mean, support has been in the past tested about two or three times before it's broken on the S&P, so I should have been just neutral and not just gone so heavily short. And then of course we got the bounce, so I covered and I bought puts in Nvidia, puts in the Qs and SPY, and they all hemorrhage. So down 100 on that, down like 114 on that, down about 170 on that. Yeah, so that was bad, very bad. But made like 15 bucks off Cloudflare. Yay. So after that, that was just a terrible, just everything I shouldn't have done. We were trading with what just happened the other day, so I was just way too biased, thinking I had FOMO again because I missed out last time, so I was fearful I'd miss out again, and it just looked like we were just going straight down. I mean, just like terrible high volume selling. And then we just got this bounce, and we just kind of been chopping ever since. We're still red on the day, but it'll probably sell off towards the end of the day, would be my guess. But right now, I'm thinking this is just another fake little bounce, or not even a bounce, just a sideways chop to cool off the RSI. Because see here on the hourly RSI, we were about oversold, and now we're just pushing up and just chopping around to get that RSI up towards 70 so they can sell it off even more. Um, yeah, but then yesterday I was talking about just the general scheme of how much yesterday changed everything. I mean, my opinions on like what was possible now just completely gone. Uh, yeah, because so let's pull the clocks back to Wednesday. I'm thinking Wednesday we're gonna get Pal. He's gonna go up there and he's gonna say 50 basis points is what we're doing, and that's all we're gonna be doing. And the market had been pricing that in for about the month of April, just completely dumping. And then I thought once we get confirmation of that, surely we will get a rally because everyone was afraid that 75 basis points was on the table, and he said nope, it is not. So we didn't get that. We got the 50, and then we rallied for about let's zoom out on the hourly. I think the hourly just illustrates this so much better. So we rallied for about an hour and a half once Powell came out and said that. And then I'm thinking, all right, we got some momentum, but then we get this double top on SPY. We didn't break that level. We got some momentum to the upside, but go 12 hours into the future, and what do we get? A gap down and the worst sell-off in 2 years. So I was hopeful that we would get at least a bear market rally of some kind, and I mean a bear market rally is in like SPY will rally maybe like 8-9% in a bear market, just to play more games, get more long buyers in so they can short it back down, all that kind of shit. But I no longer think that is possible because now we know that not only will every rally be sold off, but it will be sold off viciously and very quickly and violently to the downside. And that is exactly what they did. So, at least for the short term, until if we get any kind of news that inflation's coming down, like then I don't think there's any reason to think otherwise. Every problem with the economy is only getting worse over time. And the markets are very forward thinking, so obviously the markets are expecting things to just only get worse from here for the short term. So yeah, I'm no longer. I mean, it was shocking yesterday. Yesterday was just shocking. You just do not see that kind of. You do not see SPY with a chart like this. Like it just does not happen. You cannot find another example on this chart where it did something like that. Besides like the Ukraine war, but that was just like a free. Like this is absurd price action. It just crazy. The biggest rally we've gotten this entire pullback, immediately followed by a vicious, very fast. Like look at this hourly candle. Are you kidding me? Just done. And then half of it was just overnight, just a gap. So it just there was no buyers in the futures market, only sellers. And then once stock market opened, only sellers continued the selling. So yeah, I'm no longer gonna load up. This just isn't any market where you can hold anything long, like, and I mean long as in buy it and hope it's higher a week from when you buy it, even short positions, because these kind of crazy rallies are possible to the upside. So yeah, that's where I am now. So I'm no longer. I was convinced like, all right, VIX is at 30, and I said that multiple times, and I said like 5 days of choppiness, and then we'll get some direction from the market. And so we got that crazy upspin on Wednesday, and then immediately followed by blood. So I was of the opinion like, all right, VIX is like at 30, you should be buying stuff right now. But after yesterday, I'm no longer convinced that buying and holding anything for a potential bear market rally is a good idea. I will just, if I see green, I will trade it and take profits quickly. I won't just, I'm no longer in the like mindset of like buy shit cheap now. I'm sure it's gonna rally 10% soon, because it just isn't, and it hasn't been for like 5 weeks now. So you can just look at every chart. I mean, every chart has had Nvidia's had big rallies, immediately sold, big pushes up, immediately sold. It formed a new low today. Nvidia broke its support today. Um, and then, I mean, Square is green right now, but like, what is this price action? Like, this is a joke. So I had earnings that were, I guess, pretty good, but they missed on revenue, so I mean, their growth numbers are just really good. Their year-over-year kind of growth and that kind of shit. That's basically what drives these growth stocks. So it gapped up pretty good, and then literally sold all of it off within the first 10 minutes and way, way more. So it's just like so obvious that there is just way more sellers waiting to short the rally than there are bulls waiting to buy into a rally right now. So um, until that changes, I will not change my mind on that. Uh, we can zoom out on, so we got Coinbase, another 6% day. I cut our losses on that one. That is just a disgusting stock. I'm so done with this. So this tapped off of $100 here today. So maybe support at $100. It's at its current lowest price since IPO. Cloudflare. I didn't read the earnings report on this, but I mean, it beat EPS barely. I mean, their EPS of it almost lost 1 cent per share as opposed to it made 1 cent per share. I don't know, fucking. So yeah, that one gapped down terribly. Uh, that one's at $65. So everyone's saying like these stocks are down like 78%. How much more can they go? And the market answers with a huge big red dingus of this is how much more it can go down. So yeah, this is where we're at. And if I mean, if yesterday was a sell-off, but only like maybe 1.5%, 2%, I would not be like doomsday right now. But for that, I mean, it just tells you everything you need to know about the market when you see that kind of price action. When you see this crazy grain immediately, violently sold off, like it tells you everything you need to know. There's no more like, well, maybe there's brighter days ahead in next week, or we'll get good news. I mean, it's still possible, but um, it just is not smart right now. It's way too risky to like buy more of anything right now and just hold it. So I'm only holding Nvidia because it has earnings coming up soonish, and it's having a decent day today. It was down like 3%, and that was another one. We broke the support, so I bought a put, and of course it reclaimed support. Should have waited for confirmation, but I did not. Got impulsive. So that's about what's going on with the market today. So I just kind of want to talk about the jobs numbers. We had really good jobs numbers. They added more than they thought. Yeah, that's good. Unemployment's still at 3%, 6%. The number of people not participating in the labor force is really bad. And then we also got, where's wages? So average hourly earning for workers climbed 0.3% month over month, or since last month. So that's slowed down. That's not good. Year over year earnings are up 5.5% with inflation that's 8.2%, but actual inflation that's the official government number. Actual inflation's obviously like at 20%. So you got inflation that's moving about 4 times faster than wages. So that is the main problem is that right now companies are like e-commerce, Amazon is already showing weakness with the consumer that they're spending less, but consumer like average net worth right now is still like super high, and you have all these people with so much money in savings, but the market is forward thinking, and market is thinking, well, people got all these crazy savings from over COVID and all this shit. Who know their fucking grandma died and left them $1 million inheritance, all this shit. But the American public is not smart about money. What would you say? Maybe 80% of people, especially not just the American public, but especially the people that run the financial institutions, they're really not smart with money. So they uh, I mean, the average spender it starts making all this money. We make all this money, and then they accommodate this kind of lifestyle. And when things start getting bad, they don't like think, oh shit, maybe I should taper back. Like they spend over what they can make, what they can afford, and then the problem just compiles on itself. And then you factor in inflation, which is like really 20% or 18%. And then you factor in that their wages aren't catching up with inflation, so they're eating through the savings they got. They're not making more money. Inflation keeps going up more and more, and that's basically where we're at. Uh, yeah, and I mean, some people are pretty optimistic that inflation's slowing down. I don't see any reason why it would be slowing down yet. Uh, so I guess the one positive thing that wages is that we won't fall into the wage price spiral, which is basically where um, wages. So you got inflation and you got wages, and right now inflation's so high that people are demanding more wages. So people get more money from their wages, and then businesses are like, well, hey, people are making more money in inflation, we can raise our prices. So they raise their prices because they have more pricing power. And then the public is like, well, shit, the prices got higher. I need more wages. Raise wages. Oh shit, now people got more money and inflation's going up. Raise prices. Price, wage, and then it spirals out of control. And that's kind of shit that can literally end economies when that gets so out of control. And right now, I think the markets are afraid that we're on the edge of that cliff and that it is a possibility. So it's pretty clear that I mean, right now it's like a lose-lose. So like the S&P was pricing in the 50 basis point. It was tanking on that. It priced it in. We got the 50 basis point. It jumped up, and then apparently, and then you got the bond market, which when you see the bond market selling off like it did yesterday, that's really when you get worried because people in bonds are actually have brains. Stock traders are just just a bunch of fucking monkeys, and they'll just chase any stupid headline. But bonds, when they sell off, they're like actually like, pal, you're full of shit. They flat. I mean, yesterday was just a big statement. Like, we do not believe you, pal. Pal goes up there and spews all this shit, and they were just the bond market was like, we don't fucking believe you. We need 75 basis points. They were obviously mad that Powell said 75 basis points is on the table because they need it. But then 75 basis point would force a recession. And the market would tank off of that too. So the market tanks because the bond market wasn't happy because they say 50 basis points, that just ain't high enough, dude. You got to go 75. You got to get aggressive. They're so far behind inflation right now. So then I want to take a look at this little chart here. So just for context, interest rates were at like 5.2% before the Great Recession back in like '07. So for context, where have we been ever since then? That's where we got this 13-year bull market. So after that, they dropped interest rates all the way to 0% at the end of 2008. And then for 6 years, or no, 8 years, they left rates at basically zero. So that is where we get this huge bull market that we've been in. And then the first sign of raising rates was the S&P do. Let's take a look. Come on, you piece of shit. Get out of here. Gotta zoom out more. We gotta go to the 10 years, baby. Alright, so 2018. Oh, wait, if you were just a blind person who had no idea, not blind person, but if you didn't know what interest rates were, you would look at what happened in 2018 and be like, wow, something bad must have happened. We were just doing great up until that point. We dropped about, shit, what was that, 290 all the way down to like 230? Damn, we dropped like 15%? No way, that's more like 30% right there, yeah. And gee, I wonder what could have happened there. Oh, the Fed started raising rates right there. And it tanked the economy. Not tanked it, but it yanked down uh, demand for stocks, which is essentially buying people that buy stocks. So they had to kill demand to get interest rates up because inflation started up again because 0% interest rates will do that when you have it for like 7 or 8 years or whatever. So, and that was, I mean, inflation wasn't even nearly that bad back in 2016 compared to what we have now. So they were ahead of inflation back then. But then, oh no, what happens next? What could possibly be lurking around the corner? So even then, which this is kind of crazy, this is how dovish the Fed is. Um, So they raised interest rates to 2.4 at about the end of 2018. Where was the worst of this pullback? The worst of the pullback was right here at the end of 2018. And then we start to recover into the next year. So what happens? We recovered into the next year. And then they started even lowering interest rates. Because they thought they raised them too high back then. They lowered interest rates even before COVID started. So interest rates went down a little bit, and then we were in a good spot right here. Like, so the economy freaked out from interest rates going down or going up, and then they eased up a little bit, and then we got smooth sailing, and then all of a sudden, what could have possibly happened at the start of 2020? We get COVID, and then all that shit goes out the window, back down to 0.0. And then, I mean, that wasn't even like, because of like, I mean, the problem with the economy during COVID was people thought unemployment would skyrocket. So that's the difference between now and then. Now we're at the point where people aren't worried about unemployment. Unemployment's the only good thing you can say about the market right now, is that unemployment isn't high. Otherwise, everything else is completely fucked up. I mean, inflation at all-time highs and only getting worse. So obviously, everything else is completely broken. And employment's the only good thing you can say about the market, and that consumers have a bunch of money. That's what everyone else keeps saying. People are like, "Wow, look at all the money the average household has. Isn't this great? They're spending all this money." And it's like, yeah, why do you think inflation's going up? Because all these people have so much money and they're spending it like crazy. So they have to kill demand. But then there's the other edge. The other side of the coin is that inflation is caused by the low supply. So they have to the low supply just keeps going lower because supply chains and fuel keeps going up in price, diesel and oil, and then demand keeps going up because now wages are starting to rise a little bit, but people still have all that money saved up from COVID. So yeah, they're in a spot where they have to just basically start a recession. Like that's the only way out of it. Like there's no there's just like no chance for a soft landing. Like when you get inflation at these kind of levels, like now it's to the point where it's going to become so ingrained in culture, like it already is. Like everyone already all talks about it, but it's going to get worse and worse and worse to the point where all these workers are demanding these like 20% raises, and then now all these workers have more money, so stores are going to be like, well, shit, people got more money to spend and they're spending it. Let's just keep raising inflation, and then oh shit, now inflation's too high, but the stocks are like. I feel like I'm kind of just all over the point with this, all over the place. So just back to my original train of thought, like this is the grand scheme of things, and nothing's gonna get as bad as back in the 70s. This is just stupid what they did back then. They really tanked the economy back then. But this is just a grand scheme of things. This is like what interest rates were at back when inflation was hardly a thing. And now, I mean, we're higher now. This is still go to the 1 year. So we jumped up 25, so now we're at basically just below 1% interest rate, but it's still way, 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 way too low. Definitely need at least like 3.5, 4% to, and this is just to slow down inflation. This isn't even to reverse it. So, and now at this point, people are just like, well, gee, I just hope inflation slows down, not that it just it quits growing, not so much it starts reversing. So yeah, this is I mean, I thought all these things before, so, and I was still like bullish. I still am bullish. I'm holding shit long. I'm not holding any shorts right now, but yeah, you cannot see price action like yesterday and just be like, wow, that was a bit of a fluke. Like, no, only an idiot would see this and just be like, that was kind of crazy what happened there, but I think we're still fine. Like, no, this is recessionary type price movement. We're either like in the recession right now or it's just about to begin. You zoom out on, let's look at the monthly. I love looking at the monthly here on SPY, baby. Let's get it. How do I get to that? Customize. God damn it. 4 hour. Yeah, give me the month. That monthly chart, baby. Let's go. Here we go. Alright. So you zoom out. Maybe I should do this on Weeble. I see shit on this. Yeah, here we go. So this is the monthly on SPY. Like, this is how little we've come down. We're still not even in a bear market on SPY. So that's why it's hard to believe that this is max pain where we're at right now. In this monthly chart, like this is how little. I mean, it seems like terrible when you zoom in on like the hourly chart. It's like, or even the 4 hour. It's like, damn, we're really tanking. But no, we really haven't seen nothing yet. I mean, most growth stocks are down way below their previous COVID levels. And right now, SPY, we've only retraced to where we were at this time last year. Not even this time last year. Yeah, just about this time last year is all we've retraced. And now the economy is definitely like worse off than it was before COVID. I mean, I guess it depends how you like categorize that, but just inflation, like all the things, just the cost of rent is going up, the cost of inflation is going up, the cost of gas is going up, wages are only going up 5%. People have all this savings, they're just gonna rip through it. I mean, maybe not, who knows? But this is kind of the hypothesis. I know I sound like a mega bear, but you don't see price action like yesterday, and then just be like, well, here's everything that's right with the economy. And there's just like so little that's right with the economy right now. So, yeah, this is all we've come down on SPY. I mean, this thing's gonna have to retrace further. It's definitely gonna tap this 200 EMA on the weekly chart, which is at like 350. The monthly, I mean, that's not even gonna be close, but yeah, there's still a lot of ways to go. Um, Otherwise, what else was I gonna talk about? But just for myself as trading, this week was good. I did really good on AMD on Wednesday, and then I knocked it out of the park on spy calls after the FOMC. That was huge. Then yesterday, I did all right yesterday. Honestly, I made like 250. Just buying puts for like Coinbase, which oh my god, I wish I held those over today. Holy shit. Um, then Baba, I had a good put on that. Nvidia, I made like 200 some bucks off that. And then I made $30. So the worst thing was definitely the three puts I bought yesterday. I bought them for a dollar, $120 per contract. I bought three of them, and those fucking things ran to about $600 per contract. So that was brutal. Um, and then today was obviously not great because I mean, it's just another thing where you get to all these headlines, they all get in your head, and you just get such a bias. And I let that bias just completely own me today, and I got owned by the market. I mean, and then there's just like there's no forgiveness in this market. If you're on the wrong side of it, you're just gonna get your ass squeezed, and that's exactly what happened to me. So that was rough. Still green on the week for day trading, so I'm still happy about the week as a whole. I think uh, I still had mostly Wednesday. I was happy I didn't try to trade through the choppiness on Tuesday and or Monday and Tuesday, and then I just like kind of backtracked a little bit today because I wasn't patient. I thought we had direction. I thought the market was just going to keep going down. And then that's the thing about like when things keep going straight up, you're waiting for it to go down because it just has to. But if we start going into recession mode, like things will just go straight down regardless of what our RSI is at. So that's what I always think when I like see. I mean, it is emotion. You get like too bearish. It's like, all right, it's coming down. Buy puts. It's coming down. It's just going to go down. And then I don't think, well, it will probably go down over time, but the market, I mean, it's not going to happen over a week, you know. A recession lasts months to years. Like, I have to tell myself that, and I just didn't this morning. So, another big fat lesson to be learned. I'm going to do more stupid things, and then I just need to, like, think Fridays are always super bad days traditionally to trade, unless there's, like, catalysts or news. So, yeah, that's what I can take away from this week. Um, just have to go easy on Fridays. I just went way too big. I bought too many puts. It was just stupid. So let's see. Consumer Price Index, CPI April. When is that coming out? So then the next big catalyst we have to look forward to is CPI data on May 11th, which is next Wednesday. So that's not as huge as the FOMC. I'm still convinced we'll have direction in the market Monday and Tuesday. I mean, Monday and Tuesday this week was just nothing. Like SPY wasn't hardly doing anything, and so CPI data coming out, that's going to be huge. If God forbid, if that is worse than we are expecting, which I don't think they will let it be. Like they've kind of just been lying on it every month, anyways. So. Um, let's see. Is there any? So here's one that's saying it might be worse than we think. But yeah, if that's worse than expectations, fucking, I'm loading up on puts. No, that's just gonna confirm what's already causing the fear. Uh, yeah, that's a huge catalyst right now because inflation is just it's not going anywhere anytime soon, especially with these interest rates. And it would be one thing, and then that's the other part of it. So I'm all over the fucking place with this. I should have written down my ideas on this. But then the other thing is that it's not just demand causing the inflation. So that's what Powell said. He said we can control demand. They can kill demand by jacking interest rates up, which they have been, and by slowing down the economy, which they have been. But they can't control the supply side of things. So that's just its own other like shortage on everything. Shortage on shipping containers, shortage on truck drivers, on gas, which is way more expensive than it was this time last year. So it's just they can only control half the equation, and they're doing a shitty part or a shitty job of just controlling the one half they have any control over. So yeah, if CPI is worse than expected, I think things are gonna get a lot worse. We'll probably see SPY around like 350ish soon. Um, I mean I don't think that's like out of if things are as bad as everyone's thinking, I mean, it's just mass psychology too. At the end of the day, like how bad do people think it's gonna get? But yeah, that's what we at right now. And I'm hardly in any long positions. I'm just in Nvidia, and I'm trying to get out of that desperately, and Google. But we had really good earnings on AMD, so I'm pretty confident about Nvidia's earnings. Um, oh yeah, let's look at the VIX index. So then VIX. I mean, I thought VIX was pretty bad this entire time. That's another thing though. You zoom out, and this is, I mean, this was the panic back in COVID. Like it was crazy, just like ridiculously high. Uh, let's go back even further, 20 years. So yeah, VIX during COVID was about as bad as VIX got back in the Great Recession. Um, VIX back in 2018 when they jacked up interest rates topped out all the way at 50. So that is kind of a good benchmark, I guess, for where we should see VIX topping out. And right now, VIX is only at 30. You know, I thought VIX was like high up at 30, but you zoom out and it's like, oh wow, if things are gonna get bad, we're not even close to where VIX needs to be. So I'm waiting to see VIX around 45, 50ish until I'm like actually gonna look to buy things. But for now, it's really just not very high in the grand scheme of things. So that's another thing I wanted to point out. But yeah, that's where we're at right now. I said this entire time, I was like, man, I hope I'm wrong. Like, I thought I was always pretty pessimistic about where Spy was going, but the entire time I was like, I don't want to be right about this, dude. I just want everything to be alright. But it's pretty obvious when you get a fucking 5.5. I mean, Nasdaq was down 5.5% at one point yesterday. When you see that kind of price action, there's just no being like positive. Like, that just tells you selling on top of stop losses getting triggered, on top of people liquidating their 40, not 401ks, but wherever the fuck they hold in their Roths, like especially after this insane 13-year bull market we've been in. If this is the first sign of a recession in like 14 years, like people have made all this money, they're not just gonna lose it over again. They made all this money back from 2008. I mean, long term, like people our age are investing for retirement, they're not to worry. But there's a lot of old money in the market right now that people, if they're not just gonna sit here and hold it through a recession, they're gonna get the fuck out and go cash. So once we see that like max, like it's getting there, it's getting there. You see 5.5 down days, it's getting there. But once you see that like max pain where people really have their money, like Apple's the most invested stock in retirement funds, I think. When you see that start to sell off, that's when I'll be like, oh shit, yep, things are happening. So right now, just looking at SPY, just the eye test on SPY. We got a tap here at support, so we could see another tap at any of these levels. I would watch for 418.50 for SPY. If we can't reclaim 414.50 by the end of today, I'm super bearish on SPY. I think we'll retest support again and probably break it. But otherwise, yeah, it's not a hot looking chart. So if we break 405, we have this gap to fill right here, which I've been talking about, 403 down to like 399 or something on SPY. So there's just no way that gap does not get filled. I was thinking the entire time, maybe we get past this whole thing without filling the gap. There's just 0% chance. So I'm really convinced we're gonna fill that gap. And now I'm waiting for rallies that I can go short in, because there is so much stupid money to be made to the short side. Like, I'm ready to be a freaking bear. I don't care if it's gay or what. But yeah, that's what I see on SPY. We'll fill that gap eventually. Nasdaq, we have made a lower low, so that's confirmed. Let's see if 310 can be held up before the end of today. And look at that fib level. Wow, we almost tapped that little fib level right there. How about that? So yeah, that's what I'm looking at on Nasdaq. We rejected this support line. We double topped up here just like SPY. I'm really focusing in on these indexes mostly for my trading now, because just individual stocks they all kind of just move like the Nasdaq, so it's hard to find outliers, and the only outliers are ones that just tank abysmally, like Cloudflare off of bad earnings. That's the only divergence right now in the market is terrible selling. It's never like a divergence of good buying, unless you're BBIG today, which went up 26%. That's pretty cool. Um, a red box even up. So that's what I'm looking at on the Nasdaq right now. So Apple's actually holding up right now. We haven't. We actually kind of have an inverse head and shoulders here, almost on the SPY or on Apple, and not really. It's kind of weak. Just got a shoulder there, head there, shoulder. So that could be bullish. SPY, any potential upside has to be held here at 159. 159 is a pretty key level. You can like see where it's either bounced hard off of it or it's either torn through it, and then over here it consolidated and bounced hard off of it and then ripped through, and now we're consolidating right below it again. So that's what I'm watching on Apple. So we are like green on these kind of days on Apple, but then you like zoom out and you look at how much Apple went down yesterday, and it's like, oh yeah, we haven't even gained half of what we lost yesterday. So they're just giving us, I just know they're giving us these little relief days where it's like, hey, we'll stop selling a little bit, maybe average down a little bit. Um, I'm past that stage. Uh, and then that's another thing is um, I don't want to. Another reason I don't want to like open a fat like we had in Facebook. We had a big old thing in Facebook. I don't want to open another one of those because you just get in this hole where it's like, oh, all right, these are shares, you get in this hole where it's like, oh man, it went down like 8% in a day. We had a terrible, another bloody red day. I'll buy more. We're not down. We're just like, it's just lower than where it's going to be in a week from now. So I'm going to buy more. Everything's fine. We're going to go back up. And we've gotten in that cycle too many times, and I do it to myself. I do it all the time. You see there and you sit through the red and you're like, well, I still believe in the stock's going to go up, so I want to buy more. So that's why I want to avoid shares of things. I want to go towards more so options. If I think Facebook's going to go up the next day or over this day, I'll buy a call and then I'll take my profit, and that's that. I won't get trapped in this psychological fucking cycle where I'm just like, you got to buy more. It's cheaper. If you like it this price, you like it this price, right? When it's just obvious that there's no rally is going to hold up in this market. It just won't. Not for at least the next few months to this next year. So that's where we're at. I'm gonna focus more so on options, and I think that's where the money is to be made. But yeah, that's all I got about my midday rambling. Last little check on S&P, we're down 0.5%. I think the Nasdaq's basically doing the exact same thing as the S&P. Yep, down 0.5%, and that's that. So yeah, that's everyone. Y'all have a good weekend. Peace.